Allspring Global Investment Head of Equities. It's been too long. It's great seeing you.
Good to see you, Charles.
All right, so let's talk about this for a moment because you say we're in the middle of the biggest CapEx cycle in history, and the focus is evolving to duration, to durability of the returns. How are you measuring that? How do we measure that, and where do we begin? Do we begin with the hyperscalers? And ultimately, how do we know which companies are using it best?
Yeah, it's a great question, and it's something that we're looking at every day. So how you look at it today is if your company is not investing in AI, it's not a great sign. They need to be investing in the future. This innovation cycle is real. But you're not going to get immediate returns on that investment for most of the players. It's going to be kind of a staged up before you finally get the revenue. But the hyperscalers, even though free cash flow is being impacted, revenue growth in the 30+% is making investors still feel that they will get a decent return on their investment.
And I think that's the case. I just had this conversation with Ed Yardeni. I think traditional Wall Street, they say ROI over the next 12 months. Maybe it doesn't come over the next 12 months. Maybe it comes over the next 24, 36 months. And that presents sort of an interesting thing. What about these tokens, right? The idea is that the cheaper they get, the more people spend on them. These companies are actually having to put their workers on budgets about this. But isn't that the sort of the currency of the future?
Yeah, what I think is fascinating is I was talking to somebody earlier, and we were saying even companies like ours, a regulated industry, are encouraging the use of AI. I think that's happening across corporate America. It's unusual that you have an innovation cycle being pushed by corporations. It's usually first by kind of consumers.
Right.
And so they're encouraging the use. It's driving up the cost right now a little higher than they expected. But as you said, the innovation cycle will turn it into a cheaper form. So it's going to be a little bit hard in the middle of this. So we're kind of in the first stages, developing. Second stage is really, okay, what does the cost look like versus our current cost structure today? And it's going to take a while to make sure that's right. But then when you see the revenues come on, it's going to be really powerful.
And that's when we start to see AI 2.0,
Yes.
the enterprise implementation, healthcare, manufacturing, transportation, financials. And it's interesting because a lot of guests come on and say, this is where you want to be right now with respect to the markets. And they're not really moving as much as you would think, but they're showing signs of life, particularly financials right now. Let's talk about areas of opportunity on the sector side. We're going to bring up a chart here because, again, industrials, small, mid-cap, emerging markets. Yeah. Industrials, they do look pretty good here.
They do, and they're sitting at the intersection of two really important things. AI development, definitely playing in the industrial space. There's a lot of plays for that, but also reglobalization. A lot of change in the way things are done and manufactured across the globe. Industrials are a prime space, especially as you go down more to the mid-cap space where they don't have the volatility that sometimes the global, the global suppliers have.
I mean, we're seeing this big time in our markets. By the way, folks, XLI breaking out. That is an impressive breakout. RSI relative strength shows that this still has more room to the upside. Mid-caps, you like mid-caps? Mid-cap momentum, we're going to bring that chart up, has been a monster, a beast. Why mid-caps? How are they benefiting?
Well, certainly as we came into 2026 and even early in 25, you saw the large caps really rally and sustain. It's been sustained for multiple years now. But if you looked at the valuation gap between mid-cap companies, it was large.
Right.
That wasn't going to help overall, but fundamentals have improved. Earnings really are driving the story for mid-cap.
And quick, before I let you go, emerging markets, and again, Ed and I had this conversation. Emerging markets really are an AI play, though. I mean, if you think about this, South Korea is your second biggest emerging markets, right? Then you have Taiwan. That's Taiwan, Semi, Hynix, and Samsung, essentially. So is this really just a de facto tech play?
What's interesting about this is they are big beneficiaries. And we talked about this again in our mid-year that we put out this week. Part of the reason why we've seen such good performance from EM is because investors were under-allocated. About 5% of global allocation was in EM. It typically it's historically been 7%. 500 billion of new money can come in if you close the gap by 1%.
Right.
So underinvestment in this space has been kind of a miss for investors.
And it's going to stay hot for a while, especially with the tech thing, because a lot of it comes out of there. Great seeing you,
Thanks,
Ann.
Charles.
Always great seeing you.